In this video, we're going to discuss pyramiding, proper pyramiding, and the process of proper pyramiding. And can be considered the black belt of trading, and it's not for everyone, unfortunately. Okay, who is it not for? Well, it's definitely not for the weak-hearted. It's not for those who can't manage their risk. It's not for those who just started trading yesterday. Okay, it's for those who are seasoned and experienced, and they understand how to manage risk. They understand how to unload their positions. Okay, they understand how to control their emotions. Why does that matter? Because when you pyramid, there's going to be a lot of money floating, maybe, if you do it right. And that may cause a lot of problems for some people. Okay, so pyramiding is important, and doing it properly is the key. But let's try to understand what is pyramiding. Okay. Basically, pyramiding is taking multiple entries on a single A to B move. So maybe we have a move A to B, and you're taking multiple entries on this A to B move. So multiple entries on one trade idea versus what most do, which is they take multiple entries on multiple moves, which is not what I'm saying. I'm saying for you guys just to catch one A to B move and pyramid that move by taking multiple safe entries on that. We'll see how, but let's understand what it is first. Okay, it's already dangerous enough, and most people shouldn't do this, and it'll likely end in disaster for them. But for those who are seasoned and experienced and know how to manage risk, let's see exactly where we're going to be pyramiding, because it seems they're pyramiding everywhere, anytime, in the middle of nowhere. That's not what we're saying. There's a very specific time to pyramid. So when and where? Well, if we know when and where is a timing thing, but when and where is the real question, and this is where. So you can consider it the final move as price leaves the zone. Okay, this move right here, which is that final move as price leaves the zone. So we're attempting to pyramid at the first retest of a valid buy zone or sell zone, and this is on the micro because we're executing entry, always on the micro if you want to use the micro for your entry. But this is where and when. It's a timing thing, but it's the final move as price leaves the zone. Now, what if this goes down but then goes up higher, and then, well, obviously that was not the final move. Okay, so it may take you a few tries, but we're talking about a proper pyramiding of that final move that leaves the zone. And what's the key here? From where? From this deeper half. This is where we want to be pyramiding, from the deeper half, and hopefully that's the final move and it leaves the zone. Same thing goes for this sell zone, where? From the deeper half of the zone. These are the moves you want to pyramid when price has a down move that originates from the deeper half, when price has an up move that originates from the deeper half over here. This is the move we are looking for. We can call this the money move, that final move down or that final rally up. Okay. Obviously, this was not the last move. This was not the final move. This was obviously, this was not the final move. This was not the final move. So eventually, if you can stick with it, then very likely you'll be able to catch this final move from the deeper half. We did not say to try and pyramid this. We did not say to try and pyramid that. Who does this kind of stuff? These are what we call catch the top sellers. Hopefully it goes straight down to zero, never comes back. That's how they think the price works. These are catch the bottom buyers. Hopefully it goes straight up to infinity and never comes back. That's not really how it works in the game. Okay? So pyramiding, what is it? Multiple entries on one A to B move. Maybe it leaves the zone and goes zone to zone. Maybe it leaves the buy zone and it goes zone to zone. So not a bad idea to unload your buys at a sell zone, and not a bad idea to unload your sells at a buy zone. Okay, so that is where we want to do this. Multiple entries on one move as price leaves the zone from the deeper half on the first retest of a valid zone on the micro. All right, hopefully that's clear. Now, next part, how? How do we pyramid? Well, let's try to understand this move here, which is a very important move. This is the final move. Obviously, if it comes back, it's not the final. I'm talking about the final move, when price finally leaves the zone. Okay, how does it do this typically? Well, it tends to leave the zone in a type of algorithmic movement that gets pushed away from the zone as price is pushed away from the zone. Same thing here. We tend to see algorithmic movement away from the buy zone if these BFIs have decided to buy up a whole bunch and this buy zone is going to work. Okay, but what do we mean by this type of movement? This is a simple break of this swing point. So on the 15-minute, obviously, the market breaks this swing point and then comes back to retest it. And then again it breaks that swing point. Just the most recent 15-minute swing point comes back to retest it, and then maybe another move. This is what we call algorithmic movement, and it tends to occur within a 20 pip range, depending on the pair, obviously, but the tighter the range, the better. But this movement occurs within a narrow pip range because we want to unload our risk as early and as efficient as possible. Now, same thing here. In a sell zone, you're looking for a break of this 15-minute swing point and then a return to retest that break. A break of the swing point only to come back and retest it. We can consider this algorithmic movement. This is very precise movement, very smooth movement, and it doesn't happen all the time. This is within a very narrow range within the zone upon which we want to unload the majority of our positions. When should you get active? When it leaves the zone? No. And from the deeper part of the zone. These are the more efficient, safer entries. When should you buy? When it leaves the zone? No, we want to be active in the deeper part of the zone, and hopefully we have the majority of our position unloaded by the time it starts to leave the zone and moves away from it, because obviously these entries later much riskier, much more likely to get taken out maybe through a slight retracement. So get to work in the deeper half. What some amazing advice. What do they do in the deeper half? They go to sleep. They get scared. What if the zone gets wiped? What if it doesn't work? What if they start thinking? Okay, get in the deeper half. That's pretty much the time to get to work. Now you can take one entry and rate and just ride that from zone to zone, but this is not one entry A to B. This is advanced. We're taking multiple entries on a single move. Okay, and hopefully you guys know how powerful that is, because I can take one move A to B and take multiple entries on it, let's say three, and if it works, that's equivalent to now somebody has to go find a trade that works and then go find another move and then another move. So they got to find three trades and they all have to work just to equal my 180B move that I pyramided. Okay, so this is real powerful, but it's like giving caviar to the homeless. This is especially on Idiotgram. Okay, so this is powerful, so you want to handle it accordingly. Okay, so hopefully this is clear. Now we can get on maybe some examples. Okay, so how are we going to be pyramiding? We're going to see this as we go through these examples, but there's only two very simple steps. Step one is the trade that you took initially. We need that to be risk-free. We need it to be break even. Step zero, you can call it. Okay. Are you ever going to go to step two without doing step one? No, because now you're just increasing the risk and not keeping the risk the same. We have to understand this is not taking three entries and we have three times the risk. No, no, no. Okay, this is taking an entry and maybe we get a chance to go break even. Step one is done. And maybe that price continues down and we add an additional. And maybe the price continues down, so you're break even on that one. And maybe it continues down, you add an additional. And maybe it continues down, that one is break even. So we unloaded three positions without ever increasing the risk. Please get it through your brain. Okay, so that's the process. Very simple, but the power is in its simplicity. Break even on any initial before unloading any additional. Now, do you unload the additional immediately? Well, that could be the right time, but we add an additional at the proper time. Okay, let the chart tell you when. Not me, not you. It's the chart tells you the good time. If we knew what time, we would program it in an EA and we're done. But this is the time where it requires a bit more fluidity. And let the way the price is reacting to the zone on the micro tell you when to add additional. Okay, we're going to see that through the examples, but this is the process. Okay, let's see this example one. Okay, these are going to be 4-hour, 15-minute examples. So 4-hour zones, 15-minute entries. What do you guys think about this A to B move that broke this previous swing point? Now, did it break it strongly? Not really, but it did break a previous swing point, and it is a valid footprint. So we have a valid zone. How do we draw the zone? From the low, the lowest, cheapest price on the planet, where very likely you had a retail kid maybe selling there, very normal. But a valid buy zone, how do we draw it? From the cheapest price on the planet, where the dumbest seller and smartest buyer transacted at the low, to the base of that candle. Okay, so this is our valid buy zone. Okay, after drawing your valid macro zone, where do you want to go? Our 15-minute chart. Okay, so let's see how price reacts to our zone, and let's see how maybe we could pyramid our trade. Now, is this the time to buy? Because it may go to infinity without us. They catch the top buyers who maybe have some liquidity now sitting below this low. But let's continue here. Hopefully we're way more advanced and we don't get tricked by the first natural tap of a buy zone. Some of you could even do this and just be a little bit more aware of the deeper half. BFIs are looking for the best deals. Usually it doesn't explode from the top half. Usually they're going to buy a whole bunch from the bottom half. Usually. Okay? That is a bullish pin bar, which is a buy signal that printed in the deeper half. Now, we also like to see that maybe many retail sellers are selling here and maybe peak in profit, which also helps add more certainty to our idea here. Now there's another pin bar, much cleaner one, that deeper into the zone. Let us add our first position. Okay. Where do we put this stop loss? Two answers. Aggressive trader places his stop below the candle signal. You enter after a bullish pin bar, a stop below the pin bar. Okay. That's the aggressive trader. Where does the conservative trader place his conservative stop? Below the zone. So below the zone conservative, below the candle signal if you're aggressive. Now, target. Do we use retail targets? Infinity if we bought, zero if we sold. Those are the emotional targets of the retail kids. So how do we set targets? Like we said in our earlier video, macro zone, macro target. It seems some of you use some little 15-minute target off your 15-minute entry. That's not what we're saying. You're going to leave a lot of money on the table. Macro zone, macro target. So let's get on the macro and see our targets. Okay. Like we discussed in our volume video, we can use volume to help us find a target. But let's see the targets that we can set. There's a target 1 somewhere here. There's a target 2 higher. There 3, 4, 5, I'm sure there's a million targets, okay? But for this, for these examples, we are not going to get fancy. We're going to use the earliest target T1. Okay, so this is the earliest target, and you cannot bail out before T1. It's the earliest one. Okay, and how do we set it? Using these swing points, but let's use volume to set it. So we have a cluster of candles here, and we will apply our volume across this cluster, and we have our heaviest point of volume right there, and we will use that as a target. Let's get on the 15-minute. Now we have our target. Now this target doesn't change, okay? You cannot lose hope in the target if it does this. You cannot change all that. You can't let the price action shake you up a little and then make you lose hope in all your targets. It's not going to work like that. But here we have our target and we executed. What's step one? Break even at the right time. Okay, so let's discuss that. First of all, two methods to this break even, and it's a very complicated topic, but some of you will make more money if you do not go break even, because you buy and then it goes your way and you go break even, and then every time you do that it comes back, takes you out, and then goes your way. Do that over and over again. If that's what happens, you're not supposed to go break even. Either hits your stop or your target. So you're actually making it worse by going break even if you don't know when to do it. Okay, but we can try to give you a couple methods. Well, one is the simple way. Tough really to say, but 20 pips. It goes 20 pips your way, break even. But we really don't like to give random, not random, but some number, okay? Because it's not how it works. Another method is what we call a micro footprint, which is a 15-minute footprint. So you have some highs here, okay? We're looking for a 15-minute swing point to be broken and then maybe break even. Okay, some of you who don't know how to go break even, let it hit your stop or your target. Okay, some of you do more damage when you go break even, because every time you go break even, it takes you out. Okay, you may need some practice, but be smart about this idea of break even, and hopefully we'll make it clear with this one. Now, it really depends on the trader's flavor, okay, and their appetite, on how soon they're going to go break even. But I'm going to go break even now, okay, because if it comes back to the deeper half, we may have a re-entry, or we may just want to be taken out and be able to sit on the sideline and observe and see what happens, because maybe it's bad news if it comes back to the deeper half. Okay, so we are break even, step one, step two, additional at the proper time. When is now the proper time? Well, that's the tough part. But here's a good idea of a proper time, which is after this 15-minute footprint. And then you have some kind of pullback. Well, now is not a bad time, or a pullback to the origin of the 15-minute move. Okay, I'll tell you what not to do is you get a 15-minute footprint and then let's buy. Usually that will happen. Okay, so this whole idea of timing is the key with this pyramiding. But let's go through the next candles and see if we get another opportunity. Another pin bar. I would like to add an additional, and I want to do it now. Where do you think our stop should be? Well, here's what I recommend. Where's our target, first of all? Non-negotiable, that doesn't change up there. Okay, forgot what the risk reward was. We don't even really look at that stuff. Okay, but well, 1 to 10 here, not bad. Okay, and that's for free, risk free. You have a 1 to 10 trade, maybe it works, but it's for free because you entered properly and then went break even properly and you earned that free position. Where will I put the stop on my additional position? At my initial entry. There's another 1 to 10. Okay. Now we had, what do we call this? That 15-minute footprint, which we call a micro footprint. Okay? Not a bad idea to be break even. I believe this one was here. And the stop is here. So we'll say a 1 to 5 there. Okay? You could also place the stop below this here, which also small footprint originated from there, but whether it's a 1 to 7 or a 1 to 5, that's really not important right now. And maybe a good time to go break even here. All right, now sometimes you're going to get taken out, but we did this on purpose. This one got taken out, but what took you out and what occurred after the takeout? A bullish engulfing. Okay, sometimes the market takes me out and I get a better entry. You think I'm all sad and miserable crying in the corner? We keep at it. Okay, this is a bullish engulfing. I'll put the stop below these lows. Where's the target? That doesn't change. Okay. Another micro footprint. Not a bad time to go risk free. So there's another free position. Notice what is going on now is these break and maybe some retest, as we saw, if there is some algorithmic movement. So if the BFIs are buying in the deeper half, you will see this type of algorithmic movement away from the zone, this break and retest type movement, and maybe we can see some here. Now, this is a retest point, and the price came back to this retest point and printed a signal there, an engulfing, a bullish engulfing. So where's the target? Where we have it here. Where's the stop? Below this candle signal or at the initial entry. Okay, here's a 1 to 6 we have here, but don't worry too much about this risk reward. What's our main priority right now? Break even. Not a bad time to go break even now. Now, this is the time where it gets much more risky to add. We do not want you to be more active here, okay? The farther it goes, the riskier it gets. Why did I say that we wanted some kind of 20 pip range, maybe even less? The tighter, the better, but this is way outside. Look at 18 here. You truly have here a 20 pip range through which you had zero drawdown if someone decided to unload there. Okay, we're being actually quite conservative here, which is just entering very safely and on break and retest. Okay, you could do this in a much more aggressive format, although just as safe without risking more and reach similar results. Okay, this is what I mean when we have a nice 15-minute strong footprint like this, and especially where this origin came from, where the origin of this 15-minute move. Okay, and watch out if price starts to drift back to the origin. So you almost always get a nice healthy pullback after what? Some 15-minute major footprint. Something similar to this. Okay, so what happened to that person who decided to buy late? Not a smooth story. Okay, what did we say? Try to catch the move as it leaves the zone. This is the safest time to do this. This is already risky enough pyramiding, so you have to be extra careful. Okay. Let's see what ends up happening here. Now, maybe this position was taken out break even, but when you are taking out break even, and you got to understand that when you're break even here at the origin, it could definitely come back. I can't help the trader who gets taken out and is sad and goes home. Look at what took you out. A bullish signal, all these wicks, and then you had a bullish engulfing. Okay, and then again you had slightly some of that break and retest here where you could have added more, but this is the whole idea of pyramiding. It takes some work, it requires more activity, it is a bit more aggressive, and it takes time. This is hard work, and you're going to have to trail along with it. It's not some set and forget type strategy. Okay, but that's one way that we could have pyramided a trade off one A to B move from this valid buy zone. Let's look at another example. Now, this is a great example here. Okay, we have a nice swing point that was broken. Can we say that this is a valid footprint? Absolutely. Let the candles disappear if it scares you. Okay, a strong move that breaks previous swing point. Now, is it a very strong swing point? Yes, it is, which makes the zone even stronger when it's a major U-turn. Swing points are just U-turns, and this is a big one, and if it breaks this swing point, that is a big deal. Now, what does that just mean? Somebody sold from this origin. Okay, why did I use this chart and this example? Because it's a very ugly zone, okay, or range. Let's see how we're going to handle this. Okay, first of all, we validated our zone through a valid footprint, okay? And let's see how we can draw this zone, which is a bit tricky. But some people can split the zone into multiple zones, which I do not like. And they can trade this zone until it's wiped, and then trade that one until it's wiped or respected, and then continue along and trade the zone that matters today. But let's use some of our tricks we learned in our volume video. Okay, I want to use volume to draw this zone because it's kind of ugly. I mean, okay, from the high to the base, that's not a 10 pip zone we want on GJ. Okay, undersized zones and oversized zones also are tough. Okay, so let's use volume across this whole entire cluster of candles. Okay, and I want to use the high, which is non-negotiable, and I need to find a better base. Okay, so is this a base, or there, or here, or here, or there, or, well, let's use volume. So I'm going to use my base as the level below the heaviest volume. So I want to use that as a base, basically covering the heaviest volume up until the high of the range. Okay, there's multiple ways we can deal with this, but this is just one way. When you have a huge cluster of candles, you can use volume to refine your zone. So we have a valid sell zone. What are we going to do if it comes back inside our macro zone? Maybe getting on what? Our micro. Okay. Maybe now's the time for that. Let's get on the 15-minute. Okay. Now, this is actually a 100 pip wide zone. Okay, so maybe we can tighten it. Let's just use a new trick here, which is let's look at this cluster of candles on the 1 hour just to see if we could find a more tighter base. Okay, somebody could use this as a base, cuts their zone in half. Okay, somebody could also use this as a base, but you could use your 1 hour chart just to see the opens and closes within your cluster of candles on the 4 hour, because maybe the 4 hour isn't too clear. Okay, but use your brain. What can we tell you? Okay, whether you have this as the zone or this, okay, we all are likely to get in different ways and in different times. Draw the zone, draw the range that works for you. Draw the zone in a way that you think is accurate. Okay, using all the tools and all your experience, obviously. But let's see as price approaches our zone, and maybe if you want, we can identify the deeper half. All right, now hopefully the traders didn't get tricked by it's gonna go down to zero without me, or it'll go down to zero without me. We can't be tricked by these. We need to be patient and get to work at the zone. Okay, so what are we seeing here on the 15 minute? Okay, sideways. Okay, and what do you think is building up above this high, above this consolidation? Liquidity. From the deeper half of the zone, you have a bullish pin bar that gets what? That gets engulfed. Not a bad idea to enter after this engulfing. Conservative stop above the zone. Aggressive stop above the candlestick signal. Okay. Target infinity and zero like retail, or do we set logical targets? Okay. This is, well, you could say target 1, 2, 3, but I really do not recommend that. I want you guys to see the major swing points and let the candles disappear if you don't get it. T1, T2, T3, T4 is your potential targets. HPT, LPT, who knows, but you would definitely understand the trade that you're taking. So, like we said, we're going to use the earliest T1. We're not here to catch millions of pips. We're here just to get you to learn how to catch an A to B move from a zone to a target. T1 if you're super desperate. Take it from zone to zone if you're patient and smart. Okay, but let's just use T1 because we're going to be doing some aggressive pyramiding. So we're not hoping for it to go to zero forever. Okay, but let's put in our position now. Okay, target is where? Right there. Don't lose hope in it, even if there's an engulfing against you. Okay, don't lose hope in your target. It's not like it's the far. This is T1. You have to be able to hold it to T1, the first target. Okay, or we have major problems. Well, you do. Okay, but let's stay positive. Let's look at this. Okay, step one, what's my goal? To break even. Okay, maybe somebody considers this a micro footprint and goes break even from there. What's the risk reward, by the way? 1 to 11, 1 to 10, who knows, who cares? Okay, so that is risk free. What's step two? Additional. Okay, at the right time. All right, we're taking out. Another bearish engulfing. So even if that took you out, break even, what do we do? Valid re-entry after a valid re-entry signal. You shouldn't care if you take a -1, -1, -1, but then you get the 1 to 10. Who cares? Okay, as long as you don't try 10 times. But even if you do try 10 times and you get a 1 to 10, it should be sufficient for you. Okay, but target, again, we have a 1 to 13. So here's the thing with this pyramiding. Sometimes the market will take you out only for you to get a better entry, a better setup, a better risk reward. It really boggles the brain how they take a loss. We took just break even, but they take a loss and they go home. So you should be able to take multiple losses and go home. Sorry, and stay with it. But you shouldn't be taking multiple losses. You should, some of them break even at least. Okay? So if you're doing it right and trading from the deeper half, the market does give you a chance to go break even. Now notice how this was not the final leg. Okay, maybe we tried to pyramid it, but it wasn't the final move. Okay, this happens, and look at the time there. New York open, and it takes everyone, and then you get a signal that could work as well. Okay, but step one, break even right now at our micro footprint. Notice that this 35 to 07 is like 20 pips. Okay, so whether you go break even at 20 or after a footprint, some of you shouldn't even go break even. Okay, but after that footprint, we're break even, and now we're ready for an additional at the right time. You do not want to be selling after the 15-minute footprint down. You want to wait at least for some green candles or some kind of pullback. Let's see what we have here. There is a break. Now, will there be a retest of that? Well, you may be ready for that. Well, that one, we had another swing point broken, a more recent one. Even though it's small, but 2 swing points broken right there. And we have our retest. So break and retest. Now we are leaving away from the zone, but here's the beauty of it. We have some floating profits by now from our initial entry because you were active in the deeper half of the zone. So the trick is to get those initial entries that can give you some floating and some room to trade. Okay, let's another sell here. Where they stop above this retest level and a target non-negotiable down here. Okay, maybe a 1 to 9 this gives us. What's step one? Micro footprint, break even. So we got a 1 to whatever this was for free. Another this position for free. Another break, small one, and it gets riskier the more it goes further from the zone. All right, looks like that one is taken out. That is an engulfing signal. Stop above the candle, target where? Same target, doesn't change. Okay, maybe a 1 to 5 here, who knows, who cares? Looks like it's coming back to the zone here. Let's see what happens. Whenever it comes back to the zone, we want to see protection. We do not want it to come back to the zone and there's no protection. We want somebody to come in and smash it down. If it returns to the zone, and we definitely don't like to see it come back to the deeper part of the zone. There may be something with our zone, maybe getting wiped, but what is the reaction we see when it returns to the zone? We have sort of a pause and then an engulfing here, and then another rally up into this range, and then a pin bar, and then another engulfing here. So let's stick with this trade and enter after that with a stop, let's say above this whole entire cluster of candles. Conservative stop above the zone, but we're not really a conservative stop type of trader. Where's the target? Down there. We have maybe a 1 to 7. There is a time for break even. Finally, we have a nice clean swing point. So notice how this was not the final move. Well, this was, but we had a pullback slightly to the zone and then another maybe down move again. So there's a signal at the retest level. An entry after that with a stop above that retest level with a target at over there. That doesn't change. 1 to 5. Break even. And maybe you get a smooth trade that hits your target. Well, this one obviously wasn't. But maybe this took you out, and it took out that one, but break even, and maybe you have a couple trades that hit your target, okay? It depends how much you want to stay with the setup and how tight your stops are, and a lot of different factors. But notice how this entry was safe. Notice how this entry was safe. Nothing came back. Nothing came back. And notice how this entry was safe. But depends how much you want to follow along the trade and how aggressive you want to be pyramiding it. Okay, one last example here. Okay, this is a 2-in-1 combo. Is this a valid buy zone? Absolutely. Do we have a valid footprint? And this is absolutely a valid footprint. Okay. Is this a valid footprint? Absolutely. Is this a valid footprint? Absolutely. So we have a zone here and we have an origin here. Okay. But let's focus on the earlier one and not predict. Okay. But although this is a weak footprint, it is a valid zone. Okay. Now, let's go on the 15-minute here. Deeper half of your range may be defined, okay, and many of these signals coming from printing at the deeper half, not a bad idea to enter after one of these. Now, target 1, target 2, 3, 4. Hopefully by now you get the idea of the target, but we will use T1 in these cases. Okay, you can use volume to identify your targets for this range. Or maybe you can use the 1 hour and understand the fixed range across this cluster. And here's our POC. That could be a healthy target. Okay, you can use this volume for the target, but there's many ways to set a target. Notice how it looks a little weird, but this is very accurate. Okay, so let's get back on the 15-minute now that we have a target. Okay, hopefully you guys set targets and you know where you're going, where you want to sail before you actually sail. Okay, from the deeper half we have a, what do we call it? You could consider a liquidity run. This low, and then another low, and all those lows were taken out. But what happened after that? Even if you were stopped out, what stopped you out? A bullish engulfing. So you got stopped out, and then a bullish engulfing, valid entry, valid re-entry signal printed. So a valid re-entry works. Notice this 15-minute footprint gave you the chance to go break even. So maybe if it comes back, you're taking out break even, which is absolutely fine. I get taken out break even quite often. Okay, we couldn't care less. We stay right with it. There is bullish engulfing from the deeper half target right there. Step one, break even. Okay, that was taken out. That one may be a full loss. But what took me out? A bullish engulfing. Let's keep it realistic here. And again, target below the candle. Sorry, stop below the candle. Target over there unchanged. Macro zone, macro target. Step one, break even. Maybe a little bit early, but let's break even. Step two, what was the risk reward? 1 to 5. Not bad. For free. Now we have that break, and we have a retest point that has formed. A pin bar at the retest level. Not a bad time. Stop is where maybe at your initial entry. Target is where doesn't change. Looks like a full loss on that one. But what took you out? A bullish pin bar and a bullish engulfing. Right back in it. Target, that doesn't change. Stop maybe at your initial entry or below the candle signal you entered on. A little early maybe break even, but okay, not a bad idea to go what? Risk free on this one. We have another break. Some people could take this signal, which is a bullish engulfing at the break and retest level. Notice how this one came right back to our 4-hour zone. Let's see if they buy more. And we'll see this better on the 4-hour. But notice, this is very important to notice, okay? The first retest, you had a move up. Now, it came back for a second, but what happened at the second? Another footprint, which is a great sign. And if this happens where there's a footprint on this touch, then you may be able to take a buy when it returns to that origin, although it's not the first retest. Okay, but if the earlier retest had a footprint after the retest and then came back, that may be a valid buy. Here's what you do not want to do is the first or second retest, you get a move and then another move, but it's even weaker and goes down. That's not the kind of buy you want to take because it's not very likely to explode more. It's likely maybe a wipeout scenario. Okay, but if it goes up like this and then comes back after the footprint, then that could be a valid buy, although it is not a first retest. Okay, so hopefully this clarifies pyramiding a little bit more. Now, some of them didn't work, some of them worked, but even if it's a 1 to 10 or a 1 to 5, okay, who cares if it's -1, -1, -1, and then you get the winner? It could even be more than this, and if you do it properly, it could be break even. Okay, so you are going to try and maybe take multiple entries, but do it properly, do it safe. Try to go break even if you're experienced and if you know how, okay? Because even if you go take a full loss or get taken out break even, it's all about risk reward in the end. One pyramided winner can cover many, many losses, and that's what matters.